So August 2023, question 25, taxation of business income. And this was a question on partnerships. So the question reads, Wakili, Safari, and Filamu trade as Wasafi Enterprises. The following is a summary of the statement of profit or loss for the business for the year ended 31st December 2022. We have incomes, gross profit, investment income, and other incomes. Expense have also been given from admin to other expenses. Then additional information, investment income is made up of the following: interest on bank deposits, dividends from investment in listed companies, interest charged on partners' drawings. Then they are saying interest charged on drawings include for Akili 1 million, Safari 800,000, and Filamu 400,000. Other incomes include gain on the sale of old furniture and equipment at 3.9, insurance compensation for cash lost 2.4. Then administration expense include rent at 16 million, billboard advertisement at 5, this was 16,000, 5,000, general expense at 10,360. Then legal fees include 3 million paid for Safari in a private legal case. Trade expense include repairs to building, VAT, and subscription to trade association. Then investment allowances for the year was agreed at 9.6. Partner salaries and interest on capital are given as follows. So Akili, Safari, and Filamu. Salaries and interest on capital. Other expenses include motor vehicle maintenance, donation to wazee wa Banado, and debt collection fees. The partner share profits in the ratio 2 to 1 for Akili, Safari, and Filamu respectively. Required, compute the tax payable by each partner for the year ended 31st December 2022. Assume that the business income is the only source of income. So business income is the only source of income. Solution. So we start with the name of the partnership, which was Wasafi Enterprises. This is Wasafi Enterprises. Then computation of taxable income for the year ended 31st December 2022. For the year ended 31st December 2022. Point is that you go to the statement that was given. There is this net profit. So you are going to start with the net profit. Net profit. And net profit reported. That is net profit reported amounted to equal sign, move up, and it is 189,740. 189,740. That is the net profit reported. Then add back disallowable expenses. Add back the disallowable expenses. Disallowable expenses. So I'll be looking at an expense, then assessing whether the expense is allowable or not allowable. So starting with the first expense. So these are expenses, admin. Confirm to see if admin is affected, because normally admin is allowable. So check if there is any admin. Number 3, rent, billboard advertisement, and the other. So we have rent, billboard advertisement. Remember, billboard is not allowed. So billboard of 5,000 is not allowed. So you add back billboard. The only advertisement that are allowed are advertisements in the form of TV, radio, and print media. So billboard advertisement of 5,000 is not allowed. 5,000, that is not allowed. Yeah, this other side. Yeah, yeah. Now from billboard advertisement, because billboard is a capital expenditure, we want to move to another item. Billboard is done. Legal fee. Check if legal fee is affected. So legal fee, not 4. Legal fee include 3 million for Safari private legal case. So this Safari private legal case of 3 million is not allowed. 3 million, that one is not allowed. Safari, this is legal fee for Safari in a private legal case. Or you can just write Safari private legal case. Another one, after legal fee, trade expense, check if trade expense is affected. Trade expense, yeah, number 5. Trade expense has repair to building, this is allowed, repairs. Then VAT, I think VAT is not allowed. So VAT of 3.4. VAT of 3.4. Subscription to trade association is allowed, but VAT of 3.4 is not. So VAT 3,400,000. VAT of 3,400,000 is not allowed. VAT of 3.4. Now the others there are allowed, like repairs to building and subscription to trade association. Those ones are allowed. Then from trade expense, depreciation is automatically not allowed, 2.2. That one is not allowed. Depreciation of 2.2. So depreciation 2.2, not allowed. Not allowed. Partner salary is not allowed. This one straight away is not allowed. So we can check if it's affected, 244 million. But partner salary is not allowed. Let's see if it was broken down. Yeah, partner salaries and interest on capital. So partner salaries was 244. That one is not allowed. So partner salary 244, not allowed. Interest on capital of 16,600 is not allowed. So interest on capital of 16,600 is not allowed. That one is also not allowed. Interest on capital of 16,600, not allowed. So after interest on partner's capital, the last expense is other expense, 12,600. Check if other expense is affected. Other expense, yeah, number 8. Other expense are motor vehicle maintenance, this is allowed. Donation to wazee wa Banado, not allowed. Debt collection is allowed. So we go with the donation to wazee wa Banado of 8.4. Donation to wazee wa Banado, 8.4. The donation to wazee wa Banado. Expense, can get the summation of this, equal sign sum Then add this, close bracket and enter. 282,600. What follows? Less allowable expense omitted. Less allowable expenses omitted. So we have some allowable expenses that are omitted. Allowable expenses that are omitted, and it is in number omitted allowable expense, number 6. Investment allowance is 9.6. So investment allowance 9.6 equals a negative 9,600,000. That is omitted investment allowance. To analyze the incomes, you already analyzed the expenses. Let us now analyze the incomes. So under incomes, there is gross profit, that is all taxable. Investment income is 9. Then other incomes are 6.3. So these incomes have been broken down here. Investment income is made up of interest on bank deposits, dividend from investment in listed companies, the interest charged on drawings. The note interest charged on drawings included the following. Then other incomes included the following. Now, we want to deduct non-taxable income. So less non-taxable income, less non-taxable income, income that is not taxed. Now, under non-taxable income, we start by analyzing the first one, investment income. So look at the investment income, which is 9. So investment income is in number 1. So 1, there is interest on bank deposits. Interest on bank deposits. So on other incomes, which will be non-taxable here, it will be the entire of investment income. Investment income. The entire of investment income. Why? Because we said that investment income is made up of the following. Interest on bank deposits, this is qualifying. So it means the 15% is the final tax. It will not be taxed again. Dividend from investment in listed company is also qualifying. The 5% is the final tax. Interest charged on partners drawing is non-taxable income. This one is non-taxable income. So the entire amount here will not be taxed again. So the entire 9 million will be deducted. So here, the entire 9 million deducted. Finally, other income. Let us also assess other income. So other income was made up of gain on sale of old furniture, insurance compensation on cash loss. The only one that is not taxable is this one, 3.9. Gain on the sale of old furniture. Insurance compensation on cash lost is taxable because this is a revenue item. Cash, inventory, and receivables are revenue items, and any insurance compensation is taxable income. But gain on the sale of non-current asset is non-taxable income of 39. So that is non-taxable, 3,900. Finally, that will give us the last part of the question, which is total taxable. Is it total taxable business income? Total taxable business income. So the total taxable business income will be equal sign that, the first one plus this, minus what we have here for investment allowance minus, I think we should add everything. Add everything because the others are already negative. So just add everything. Others are already negative, so it will just deduct. So add everything. Only if your investment allowances, your investment income and gain on the sale of old furniture are negative already. Now they wanted, after this, they wanted, the question was tax payable by each partner. So tax payable by each partner, which means you do partners allocation schedule. You're going to do a partners allocation schedule. Partners allocation schedule. And we have some partners here. You copy the names, paste as you transpose here. So transpose so that you can get the names of our partners. It is truncated. This is truncated. Then we have the column for total. So partners allocation schedule. This part we have details. So we are going to isolate a few things like interest on capital, interest on capital, interest on capital. Now the interest on capital was given, interest on capital, partner salaries and interest on capital are here. So copy, then paste transpose, right click and then you paste transpose so that you can get the interest on capital. Get total, salaries, we also have salaries for the partners, the salaries for the partners. So salaries were given in this level. Copy, paste transpose, again right click and then transpose for salaries. Confirm. Interest on drawing, interest on drawings. So interest on drawings were given again on note 1, interest on drawing, 1,800,000, 400. So 1,800,000, 400. Make sure that the interest on drawing are in deducted. Make sure they are negatives. The interest on drawings. Then we have profit share. Finally, adjusted partnership income. The adjusted partnership income. So again, the adjusted partnership income will be equal sign 449,840, 449,840. Then the difference here will be profit share. That will be 449,840, 449,840 minus 16,600 minus 244. Then again minus, just minus this 2,200 because already is a negative, it will be added. So 191,440, 191,440, 1,440, 191,440. Remember, if you add this, the answer should be 449,840, 449,840. So again, equal sign 449,840 minus 16,600 minus 244, finally minus 2.2, and this is a negative, that means it will add. Then profit and loss were to be shared in some ratio 2 to 1. 2 to 1. So 2 to 1 will be equal sign, then bracket 2 over 5, close bracket, then times, click on 191,440, lock that with absolute cell referencing. So 2 over 5 times 191,440. This will be dragged across. But now this one changes to 1. The last one changes to 1. Get the total for adjusted partnership income, which will be added with the alt equal to get your adjusted partnership income for the individual partners. Tax payable. Tax payable. If at all there is any, we will start by bringing wakili, then wakili, and the rest up to there. First, so you start with the first 288,000 times 10%. But before that, I want us to, because the tax rates are not truncated. The tax rates are not truncated. These tax rates are not truncated. So you can see what we have here. They are not, unless we want to truncate this as well, which means we'll be using 288. Unless you also want to truncate this. I can get that in full, or we can truncate this other side, depending on what you want. So that will also be truncated then. So it will be the first 288, 288 truncated times 10%. Times 10%. So that will be equal sign, what we have here, times 10%. Drag across. Nope, that is wrong. That is wrong. It will be equal sign 288 times 10%. Just 288 times 10%. 288 times 10%. Remember, they are truncated. Next, 100. Next, 100 times 25%. Next, 100 times 25%. It should be 28 point. So this was next 100,000. Of course, 100,000 is this, 100,000. 388 minus 288, 388 minus 288. So next 100,000 is going to be 100 times 25. It's truncated, so you pick 100 times 25%. The next is going to be 6,000 minus 388. So 6,000 minus 388, that will be 6,000 minus, already what we have is 388. The answer is 5612. So next, 5612 times 30%. 5612 times 30%. 5612 times 30%. We still have next, but how much? So the next one will be next 9.6 and 6 million. 9.6 and 6 million. So next 9,600,000 times 6 million. That should be 3.6. So next 3,600,000 times 32.5%. 32.5%. So that will be equal sign 3,600,000 times 32.5%. 3.6 times 32.5. You're getting that. Then now excess over, because now it's exceeding, it will be excess over 9.6. Excess over 9.6. So excess over 9,600 times 35%. Times 35%. And the first one is going to be equal sign bracket. Equal sign bracket. Click on the adjusted partnership income of 159 up there, minus 9,600,000 close bracket, then multiply times 35%. That is what you multiply times 35%. So 159,576 minus 96, that is 9,600,000, then times 35. Enter, can drag this across. That is what we get as our taxes for the brackets given. Gross tax payable. Gross tax payable. Gross tax payable, then personal relief. Personal relief is 28.8. Personal relief is 28.8. So that is 28.8. 28.8. That is 28,800. Two decimal places. Even these should be two decimal places. The net tax payable. net tax payable, which will be that. So this is the net tax payable from our solution. Net tax payable.